Hello and welcome back everyone to Stock Market Weekly. I'm your host Evan Medeiros. This is the show where we break down the notable moves across financial markets in 20 minutes or less. And I'm a little bit pressed for time today, so we're going to definitely stick to that 20 minutes or less. We've got our own charts, our own deck built for you today. Let's talk about what happened. It was a holiday shortened week out there. It was actually pretty quiet. There were two kind of main events, catalysts that the market was chewing on. The first here is Nvidia. That's the chart we're looking at right now. They reported earnings. Of course, they are central hub, ground zero to the AI trade, and results were pretty good, right? They sort of reaffirmed AI strength. There's lots of demand. There was some confusion on the actual EPS numbers because we had some one-time charges, but generally speaking here, this stock has rallied approximately 55% off of the April lows. It gapped up off of earnings, which you can see here, and then it kind of, floated lower here into the end of the week with a little bit of profit taking, but it's kind of comfortably sitting in this 130 to 140 range here, which is pretty good, right? Some digestion here is pretty good. It's about 10-15% from its all-time highs, but if this can kind of hang in there, digest, and build an upper level base, then I'd say things look pretty good for the growth trend here. Now, big second story catalyst that the market was chewing on was really this, ruling the international, the Court of International Trade, I think it was, coming down basically saying that Trump's executive orders on tariffs was unconstitutional and those would have to be frozen. And suddenly we got a, kind of change of rhetoric and what we thought was allowable and what was going down here for tariffs. And then just 24 hours later, the Federal Court of Appeals basically reversed the decision, reinstating the tariffs. And so we're kind of in an interesting spot here, just to add a little bit of confusion to markets now on tariffs, whether or not these can persist as expected. And now there's probably going to be some legal battles going on. I'm not going to pretend to know the intricate details here, but it's certainly something that will impact markets here as some of these headlines sway one way or the other. Generally speaking, though, the S&P 500 took it in stride this week. Again, it was a holiday shortened week, 4 days of trading. You can see here we're basically sideways between, call it 582 and 592 or so, and kind of carving out a sideways range, which we will start to think about in terms of a breakout direction and continuation or a reversal, right, as we start to go through some of these slides. Now, quick pit stop here to our sponsor, Investors Business Daily. They do have a trading summit that is happening, depending on when you're watching this, tomorrow or today. It's Saturday morning, May 31st. It's a free event. It's 2 hours. It's about finding strong stocks. It's about picking winners. It's about locking in gains. So check it out. Take advantage of the free education. It's just an email, name and email. Go join the live summit. See if you can pick up some new techniques for your trading. Use the link right down there, tinyurl.com/IBD-May-Summit. I will put the link in the description of this show as well. Thanks, IBD, for supporting the show. And you can register for the summit right there. Now, let's get into performance here. So index performance this week was positive. So even though we had a little bit of chops and some sideways indecision, it was a pretty constructive week out there. So the Qs were up 2%, SPY up 2%, Dow was up 1.5%, Russell 2000 up 1.25%. So it was a good showing there for the US markets. Here's what volatility did this week. So we basically started the week off at 19 and we fell lower. We had a slight uptick on Wednesday, and then we ended the week around 18.70. So a pretty constructive week with vol once again kind of sucking out of this market and comfortably closing below 20. US dollar kind of sideways, grinding, trying to find a base here. It sold off aggressively and now it's kind of floating, moving sideways here, but pretty much a sideways trade throughout the week. And 10-year treasury yield, which is very important here, as all eyes are on it as it starts to get north of that 4.5% number. it fell below it, right? So it actually moved downward this week. So that was, I think, a constructive showing, a constructive sign there for equity market bulls, kind of relieving, a sigh of relief, so to speak, as it falls back below that psychological 4.5% level. Now, in terms of sector performance, lots to like this week. Real estate was the big winner. Financials, technology, those were your three big standouts to the upside. That's a pretty powerful combo, all up around 2% or so. It was really energy, materials, utilities. Those were the underperformers there. It was only energy, though, that was in the red this week, down 0.56%. Now, if we look at our sectors here with our momentum models, so this is sort of built off of our classic smart trend filters, you can see that everything here is either neutral to bullish in terms of our momentum model. So that's a pretty constructive breath signal in itself. There's nothing that's really on a big downtrend here on this momentum side of things. Semiconductors, industrials, gold miners, those are the top of the list here. These have been some of the strongest signals that we've seen, or the persistent signals that we've seen underneath the hood. That's continuing, and we do have a little bit more chop though, right? We have a little bit more in the neutral side of things, where the glass is sort of half full, let's call it, and not really strong in one direction or the other. Now, underneath the hood a little bit further, 52-week highs and lows here. Again, you can see we're still getting more 52-week highs made on a day-to-day basis, but it's still not a very convincing number. I've been a little bit kind of strict about this. I'd love to see, this is where I think there's room for improvement, right? If we were grading the stock market in terms of breadth, in terms of real kind of support and momentum under the hood, I'd love to see this expand to triple digit numbers on a day-to-day basis. We still haven't seen that yet. Markets are, again, still kind of making up their mind in this wider range. We had that aggressive, sharp, steep March, April sell-off, and now we've recovered a lot of those grounds, but can we actually persist and push new highs, right? Like, that's what we're really waiting on here, and it still seems like we're going to have to wait some a little while longer. So jury's still out on this right now. It's just kind of sitting in no man's land. Percent of S&P 500 stocks above a 20 SMA, it's at 61%. Really not too much to say here, kind of in a pretty average spot. Put to call ratio, kind of the same thing. I mean, we're grinding a little bit lower here. Both of these stats are as of Thursday's data, so we'll see what the weekend numbers present us, but for now, not really too much to say about it. So if we take a look here at just the SPY again, just to take another zoomed out version here, we've really gone sideways now for 12 days. I think that's the big takeaway. We're about 4% from all-time highs, and we've gone nowhere over the last 12 days. And going nowhere, though, is something, right? It is what the market is doing, and that is meaningful because that tells us that we're spending some energy in this spot. We're starting to consolidate. We had this V-shaped move in April, and now we're just finding a little bit of an equilibrium here. And I think what we're going to be paying attention to now as we go into June is, do we turn this currently 12-day consolidation into a continuation pattern that sends us up to new highs? Or does this become the distribution point? Does this come the point where there are no more buyers left to take us any higher, and we're about to roll back over and start to move lower into and towards those April lows, right? Like, that's the decision point I think that we're at right now. It seems like the market is comfortably still going sideways. It seems like the evidence is still in the bulls' favor at this point. I think our positioning here, our disposition in this market, is that this is still a bullish, market that we want to think about long signals, not necessarily short signals. That's the way we're viewing things as of right now. That could change, but we're still looking for opportunities on the long side until we see more convincing evidence that we are breaking down, or, rolling over, deterioration underneath the hood. Those are the things that we would be looking for to get us back on the bearish side. Okay. So right now, this is kind of the sandwich volatility compression that we're in. The NASDAQ 100, it's pretty much the same thing. It's 4% from all-time highs. We've got support at 505. We've got a gap fill around 493. So we have some levels below us. And, you know, full stop, we could go down and fill a gap and test support and retrace another 2-3%. It doesn't mean the world has to end, right? It doesn't mean we have to go down to test those April lows immediately. We could easily back and fill a little bit and kind of get folks off guard and shake things up before a move up, before that continuation pattern takes a bigger hold. But the same pattern is developing here in the Qs. We are going sideways here for longer, and we do now start to, as traders, want to pay attention to these highs and lows, the range, the relative ranges for a breakout move one way or the other. So Qs here had a nice save on Friday. Again, notice some of the volatility we saw here on Friday. We did get a pretty good wick down and then a reversal and drive up off of the lows. So we want to see if that can stick there. And again, just showing a little bit of turbulence here and in this range, just generally speaking. So the next market I want to talk about, which I continue to talk about here because I think it is interesting and central to the trends this year, is gold. And gold continues to consolidate. It is one of the best performing asset classes this year, and it was last year. And this continues to look pretty constructive to me as we topped out in April in that panic, in that fear in the stock market as the stock market was putting in lows, gold was, kind of putting in its highs. But this is consolidating in a pretty constructive fashion. So I would just keep this on your radar for potential continuation. As I have, kind of always say as I speak to equity traders, if gold is not interesting enough to you, gold miners as a sector, as an industry, is a place to look because some of those stocks do move pretty aggressively. And so I'm still bullish on gold here this year through the next handful of months. But again, we are consolidating. So just keep that in mind and, keep gold on the radar, let's call it. Bitcoin here did finally put in sort of its first meaningful down week since the April lows. So this has been on a very strong march up, just like equities. It did break out to new marginal highs here around 112, 113 or so. And now it's giving back about 5 or 6%. I posted some charts and I think I talked about it last week as well. The ideal spot to really keep that maximum momentum and strength and energy in this market was holding that 106K area, which again, you can see is the white line on this chart. That was approximately kind of the closing highs here back from late 24, early 2025. And you can see that we are, at the time of recording this anyway, starting to break below this level. So to me, it doesn't mean we have to fall apart, and it doesn't mean we have to have a large, aggressive pullback, but it does mean or it suggests to me that we might be in a pullback mode longer and deeper than that shallow 5%, right? We might have to come down and re-challenge and test that 100K area, that psychological level, to see if buyers are still there. So our models, our trend models here, still long and engaged in Bitcoin. Our Galahad trading system is long. Some of my internal systems taking some risk off the table or selling calls against positions just to reduce that exposure, as recognizing that some of this momentum has come out of this market, but we don't want to be totally sidelined here. So Bitcoin in pullback mode, keep an eye on that if you're waiting for an entry. And now I just want to run through a handful of stocks on our best ideas list. So again, the best ideas list is just strong stocks, stocks that are moving, that are pretty fast movers and that are strong in general, right? So QBTS here, this is the quantum play. It's pulled back pretty meaningful here. Now it's had a huge move up. I mean, from $8 to $20 is, you know, in basically a month's time is a pretty sharp move. But if you are a, you know, momentum trader, if you are looking for what's working in this market, then this is a place to pay attention to. And you did get, you know, basically a 5-6 point retracement off of the highs, and you got a little bit of a you know, kind of bull reversal here, outside reversal on Friday session. So some things to look at. QBTS looks interesting. Again, not for the faint of heart. SMR. So we talked a little bit about, I don't know if we went through the charts last week. I can't quite remember, but on our best ideas list is a lot of nuclear stocks. SMR, again, monster move to the upside, but it's pulling back a little bit, right? It pulled back 6 or 7 points off of the highs here, and you can see it's kind of trying to hold on to these November 2024 highs. So again, if you're into, you know, the higher paced volatile stocks, things that are moving right now and looking while the indexes are trading sideways, here's where some of that strength under the hood is. SMR is one of them. OKLO is another. So again, nuclear stock here, you know, moved back up towards highs, didn't quite break out. Again, little bit nosebleed, right? The chase has been on, so just buyer beware, pick your spot, add it to the watch list if this is something. It's not necessarily go out and buy it Monday type of ideas for you. Palantir, right? So again, nothing new here. This has been kind of the poster child leadership stock for the past 18 months or so. And here it is again, doing what Palantir does, breaking out to new highs, expansion in range, heavy volume, consolidated beautifully at the prior highs. The gap filled down, or the gap down off of earnings a couple of weeks ago quickly got filled. And here we go off to the races, making new highs again. So Palantir continues to work in this environment. And I'll leave you with one last one from our best ideas list is CrowdStrike. Again, pretty widely talked about name, but broke out above 450 last week, and then it consolidated and had a strong close to finish this week. So again, another good, strong candidate here in a otherwise sideways dreary market. So these are some of your leadership areas out there, and there are, you know, handful of other sectors. You know, even restaurants are, you know, showing up a lot on the momentum names, actually breaking out to new highs, which is kind of curious. I think like Shake Shack and a few other restaurant groups that I saw hit the list, and also some retailers, which are interesting. Names that I haven't thought about in years are starting to break out to multi-year highs, which is kind of curious as well. So there are pockets of momentum right now, and we'll talk more about that and our best ideas list as we go on. I want to leave you with the economic data for next week. This is a busy week on tap ahead of us. We have ISM manufacturing data that we'll be getting, services PMI as well, and then we're going to get initial jobless claims in our unemployment report. So we have a heavy week of econ data on deck, and given the fact that markets have gone sideways for that 12-13 day period, this could be some catalyst here to nudge us in one direction or the other. So keep these dates on your radar. Earnings season is mostly over. There's still some companies reporting, but I think these are going to be the big catalysts next week as we turn over a new calendar month. So overall, you know, our disposition here is still kind of, you know, glass half full. We are looking for opportunities in this market. It's choppy on the index level, but there are things, pockets of momentum that seem to continue to work right now. And last but not least, IBD. Again, check out that link in the description of this video. I'll put it there, and you can check out some of the other offerings we have in the description of this video if you want to check out some of our trading systems or work with me on some ideas. We've got links in the description of this show. So quick video, all slides this week. We're going to still work on this format. We are still building out our internal kind of charting research engine here at the Trade Risk, and I will continue to present more ideas and views each and every week, time permitting. So thanks as always for tuning in every Friday. Make sure you do subscribe to our YouTube channel if you like this show. Give it a thumbs up, and we hope to see you back here next week. Have a great weekend, and see you in the next episode.